these are options that you can get true free money with some stipulations attached. The American Dream Grant from the board is one that's legitimately free money. Welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Broch Lassig, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
Welcome back to Loans Elevated. So today we're diving into grant and DPA programs, and really the specifics on what you need to know and what you need to understand to make the right choices around using these programs. So first, let's dive into down payment assistance programs. So the main way we differentiate between a down payment assistance and a grant is the obligation to repay the funds you're using to help you buy the house and the costs associated with it. So most of these programs we consider down payment assistance, not grants, even though they're commonly referred by realtors or homebuyers as a grant. We would refer to it as down payment assistance because you have to repay the money, and there are commonly fees attached that are not fees that are subject to a loan without this type of assistance or a legitimate grant. So the most common one that we use in our branch, basically the only one that we use in our branch, is Utah Housing Corporation. So Utah Housing Corporation is a government-funded corporation here in Utah that provides down payment assistance options for home buyers in Utah. They serve a bunch of different roles as well for housing, like multifamily government subsidies and things as well for apartments, but they are the ones that manage these programs. And so they have several programs. Some are designed for first-time home buyers only, and those come with better discounts than if you weren't a first-time home buyer, and lower rates, for example, potentially less fees.
And more availability to funds, too.
True, yeah, more availability to funds. However, they're a little bit more strict on income qualifications. So there's different things you gotta
And overall guidelines. There's tighter
right.
boxes you have to fit in.
Yeah, exactly. A tighter box. However, the cool thing about it is, which is a very common misconception that people have, is you can get down payment assistance through Utah Housing and own another home. So you can buy a second home, or not a second home, forgive me, but you can buy a new primary residence while retaining your other one and get 100% financing to buy that, which is pretty cool. There are still some limitations, but that's powerful, I think, for people that are trying to evolve in their homeownership journey.
Yeah, and we say 100%
exist.
Financing, but in all reality, unless you get some sort of seller concessions or other form of concessions, you're still going to come to the table with, depending on the property, $1,000 to $3,000 to $4,000, depending on what it looks like.
Mm-hmm.
But oftentimes, right now in the state of the market, I'm seeing it. Oftentimes, agents are able to negotiate concessions to where I've literally had borrowers come to the table with no money out of pocket.
Even get their earnest money back.
Yeah, exactly.
Like it's pretty awesome. So those options for sure exist. The one thing I was going to say, the way it works, just to maybe, and these are details we'll dive further into when we work one-on-one with clients. But the way this works is when you use this program, there is still technically a down payment. So there's a 3.5% down payment. If you, generally speaking, we only use the FHA version because it's the cheaper option, better rates, better payments, so on and so forth. So they do have a conventional option as well, but the way it works is there is a down payment associated. So there's a 3.5% down payment, which is the standard FHA down payment. But then on top of that, there's a second mortgage, which is the down payment assistance that is up to 6% of whatever your first mortgage amount is, and allows you to subsidize that down payment requirement and also closing costs that are associated with the mortgage. But like I said earlier, I think the main drawback, at least in my opinion on this, is there are fees, significant fees attached to this specific program that you wouldn't pay on a non-Utah Housing or down payment assistance program. So if you could avoid those fees by funding your down payment somewhere else, I'm always a fan of that.
When you're also paying interest, too, on the second mortgage itself.
Which is more than the interest on the first mortgage.
It's usually 1% higher than your first mortgage rate.
Yeah, and there are some limitations to that protect them. But now one super trendy option, and this is the one that's being talked about as a grant. all over the place.
And you might see this on the news. I go into.
It is everywhere.
Yeah, social media. I see it everywhere.
Home buyers know about it. Realtors know about it. The news is talking about it. Social media.
One of the first questions I get that people ask about grants.
Exactly, and they say, "Hey, what about that $20,000 new construction grant?" This is the SB 240 grant, which is also managed by Utah Housing, but there were funds allocated through legislation in Utah to fund this. Now, the crazy thing is this is not a grant. This is a down payment assistance. It's another form of the program we were just talking about, which is a second mortgage attached. This is also a second mortgage. It's up to $20,000. There's no payment associated, and I don't think there's a rate, right? They don't pay interest on it.
Correct.
So no interest and no payment, but you have to use Utah Housing. So there are additional fees associated with the mortgage to take advantage of this $20,000.
And it's again, he briefly said this, but to reiterate, it is only for new construction under $450,000. I've heard rumors they're trying to raise it to $500,000, but as of right now, it's at $450,000.
Yeah, so it's limited that way. But this is not a grant. It is a second mortgage. It's silent, sits on the property, and you have to repay this at some point. When you refinance or you sell, the money has to be repaid. Yeah. So it's not it's not free money, in other words, which a lot of people think. And additionally, like let's say a $450,000 house, because you have to go through Utah Housing to get this grant, your mortgage has to be a Utah Housing mortgage. It's about 1.5% in additional fees to get this money. So on a 450 house, we're talking like about $7,000 in additional fees. So $7,000 in fees to get $20,000 in money that you can use to help you buy a home that you have to pay back anyway. Right. That's a significant cost. Like $7,000 on $20,000.
Yeah. Well, and the state's explanation for why they do it this way is so it's a recyclable grant, because as you pay it back, it's always going to be available for other first-time home buyers. But it does suck because there's probably alternative ways to find the cash that's a lot cheaper.
Maybe.
The long run. Yeah.
And we're not beating it up. Like we love Utah Housing. We think the program is amazing. If it wasn't here, there would be many people that would not be homeowners that are homeowners because of the program. Right. So we love it.
Yeah. If there's no other forms of getting the cash, you should do it 10 times out of 10. It's way better than
certainly.
Yeah.
But just don't take it at surface level. Like, I've got to we have clients that have the ability to fund the money at a regular down payment on a regular program. And they're like, no, I want to use this program. And it's like, you need to understand the details before you dive in, because you could be wasting money. It's like 35% cost on the money. It's worse than credit card. Right. Borrowing on a credit card, the expense.
No, exactly. Well, and let's reel it back a little bit. Going back to just down payment assistance, not that specific SB 240 grant. I think the worst thing about the grant or about the down payment assistance is as soon as you get into the house, you're upside down in equity. You don't have any equity in the house at that point.
You're negative equity. Exactly. Like most of the time when we close these, it's crazy. The loan to value on the mortgages is like 102.5%. So you're over 100% of your value, like you are upside down. And a lot of people don't think about that either. They're signing up to be underwater on this asset. Now, again, we don't think it's the worst thing in the world because with the values go up.
Exactly. Within 6 months, you're probably going to be positive.
Exactly. So it's like, it is something you should use if there is no other option. But what we're encouraging is don't take it at surface level and be fooled that this is something that is foolproof and free money and something you should for sure take advantage of, because maybe not. Now, there's another very important component. So Utah Housing Corporation, you can only do those loans if you're an approved lender to do the loans. And there are many, many, many lenders here in Utah that cannot do these loans. So what does that cause? That causes them to promote different alternatives and oftentimes promote those different alternatives as better alternatives. The reality is they're not
oftentimes
better.
These are nationwide programs that they're preaching, and they are expensive.
like so much more expensive than even this program. Yeah, it's like loan shark type stuff. But the funny thing is they can't do, these lenders may not be able to do Utah Housing, so they're promoting this other one and they're selling it as a benefit, but it's not. So you got to be cautious there too, because that program's even more expensive than this one. Yeah. You got to make sure you're dealing with a lender that understands that and can educate you on the real details. And that's really the role we attempt to serve with all of our clients, our business partners, is like, we obviously have opinions, but our goal is simply just to empower people with all the information they need and the peripheral thought processes of I guess, what are you not considering that you should consider before you make the decision? So we think that's important. And just to put a cap on it, definitely better to use these programs than not buy. However, if you can avoid them, I encourage it.
Yeah, no, for sure. So that was down payment assistance. Now let's switch over to grants. We've got, there's a slew of different grants. There's city grants. There's grants offered by our company. There's grants offered by the Board of Realtors. There's a ton of options out there. First, let's talk about city grants. So more oftentimes than not, a city grant falls in the same lines. You have to repay it.
Right. Pretty much, I think all of them, actually. Yeah. I don't think there is one that...
Yeah.
Well, they at times they can be forgiven.
Yep.
Over a period of time.
Exactly.
They
you
would
have
be
to have
forgiven.
it for a certain period of time. And
right.
then...
But that's sketchy in this market because if you refinance, you've got to repay it almost all the time.
Exactly.
And you're going to refinance.
In the high rate environment.
Exactly. Like soon. You know, our expectation is the next 1 to 2 years you're going to refi. And normally if you refi or sell within the first 5 years, you've got to repay all that money. Now, most of the time they're no payments, no interest, similar to the $20,000 from Utah Housing.
Right.
But the cool thing is on these programs, you can use just a regular FHA loan. You don't have to use Utah Housing's loan, so you avoid some upfront fees. So they are better. But yeah, what other thoughts do you have on the city and county grants?
One thing that stands out to me, when a client comes to me and they first start talking about grants, it's like the only option they want to go down. The tough thing about going down that route is I don't want grants to be our plan A, because I guess it can be a plan A, but I want to make sure we have a plan B and C as well, because grants, oftentimes you have to be under contract with a property in order to get accepted for the grant, meaning you already have to have found a house, negotiate on the terms, and then you get accepted or get your grant accepted.
Well, it's negotiate on the terms on the contract with the seller, which include the timeline for you to close.
Exactly.
And you don't even know if you have the grant approved. I mean, in many cases, there's some that you can be more proactive, but like that's sketchy. You may like earnest money could be at risk, or you may have to negotiate a longer contract period.
Especially as it gets more competitive.
For sure. Yeah, because we're seeing multi-offers. I mean, it's brutal. The other thing that's very interesting, especially on these city and county funded grants, the income limitations based on the household size are tremendously limiting. Like, I don't even, honestly, I can't remember the last time I was able to get a client. In fact, I can remember one time I was able to get a client approved on one of these city or county funded grants that actually met the income limitations.
Right.
Because most people, they can't afford the mortgage payment if they make that little. You know, so they're, especially now with rates so high, it's like it doesn't really work.
Well, and along that same point, a lot of the grants also require some money out of pocket. So you're not going to be 100% down payment, or grant where you're not coming out with any money.
Right.
It will require sometimes 1 to 2 to 3% down before they'll offer any funds.
Yep. And sometimes as little as $500. But these programs, I mean, they're all over the place. There's a lot of great options. However, oftentimes limiting. Sometimes the funds are not available and they're on a first come, first serve basis. But this is stuff that, I mean, this is our job, so we can help you understand all of these options, but we wanted to just at least share some details on like the limitations that might be involved and help open your eyes, because oftentimes it's promoted as like there's a money tree somewhere for house buying, and you can just go pull a stack of cash off to help you buy the house. It just isn't that simple.
Right, for sure. And again, not like we don't want to beat it up, because this is one of the biggest investments you're ever going to make, and if you're relying on a grant to do that, it's probably not a good idea.
Or if you're closed-minded to considering anything other than a grant, that's a bad way to enter into the process, because it could result in not the best thing for you, your family, your financial situation. There is one, though, that we love, which you mentioned, from the Salt Lake Board of Realtors.
American Dream Grant.
Yeah, it's super cool. So the Salt Lake Board several years ago got together and they're like, man, how can we give back to the community as a board and invest some of the revenue we get from the agent fees that go into their firm, invest that back in the community to help promote homeownership. So they do a lottery-based grant that I think is like normally $5,000. It may have gone up recently.
Yeah, I think the last one they just did this quarter was $7,000 to $9,000, in that range.
Sweet. Okay, so somewhere in there, $5,000 to $10,000. But you can apply now. It follows much of the same guidelines as like Utah Housing would, so we can kind of coach you on if it's something you would even apply for or have a chance for. You could reach out to us and we could kind of be proactive in understanding what the likelihood of you getting this is. But then you go apply. And of course, with a bunch of people in the industry and promoting it and wanting our clients to get it, there's hundreds, there's thousands.
We all know this is the best one out there.
For sure. Yeah. Exactly. And we're all excited about it. So there's hundreds, if not thousands of people that apply, and there's only a few that come out per quarter, like 1 or 2 or 3.
Yeah. I think there's 3 this quarter.
Yeah.
Don't quote me on that, but yeah, I think there's 3. And we usually have a multitude of clients applying every single quarter for this. And in fact, we just got our first client to get accepted this quarter. We were stoked about it.
Since it started. And we've been, we promote it pretty heavily and are always trying to get people submitted in for it. Now, one thing we didn't mention that's actually pretty cool, which is city and county funded versions, are for first responders, police, fire, EMS. There are special options that provide different solutions for those specific home buyers. Some of them have to be living in the city or serving in the city they're buying in to get this, but there are some unique grants for those people, which is really cool. You may not even have to be a first-time home buyer in those cases and get some of those options.
Yeah.
True free money with some stipulations attached. The American Dream Grant from the board is one that's legitimately free money. There's really no catch except for it's a lottery with very limited chances to get it. But our favorite, dive into our favorite, because this one is just like amazing.
We literally have loans closing every single month with this grant attached.
Every week, probably. It's crazy.
Yeah. It's awesome. It is our in-house CCM Smart Start $4,000 grant. There's a couple of boxes you have to fit in, but the income limitations are way more manageable. In fact, I just did a consultation yesterday with the client on this, where they're coming with minimal funds to close because of this $4,000 grant.
I had a client this month close, and I think she was only out of pocket like $2,000 total out of pocket for the down payment and everything. And she didn't, there's no payment attached to it. So reeling back to down payment assistance through like Utah Housing, the payment's going to be $150, $200 a month more because you have that second mortgage. Plus the rate is commonly higher, and you don't have an option or an affordable option to go conventional.
Well, another cool option is they fit into such a specific box as well that oftentimes other portions of the loan is cheaper too. The interest rate, the mortgage insurance. They're saving money in other facets besides the down payment.
The crazy thing, like that client of mine, you bring the point up perfectly. It was the cheapest payment option, and in addition, she got $4,000. And with the seller paying closing costs, she was only like $2,000 out of pocket.
Yeah, seriously,
it's amazing.
And she can refinance in 6 months or
whenever.
And keep the funds.
Exactly.
She doesn't have the golden handcuffs of repaying that back in months down the road.
No limitations whatsoever. I mean, as far as repayment, there's no requirement to repay. There are some limitations, like you have to be a first-time home buyer. At least one borrower has to be a first-time home buyer. And there are some income limitations, but like TJ said, it's a little more flexible. Like we can get strategic primarily because it's qualifying income, not household income. So a lot of these city and county funded grants, that's one issue, is it's household income. And the income limits are so low. They're just like, they need to be updated and revamped. We'll see what happens. But this particular one, our favorite one, which is the cross-country mortgage, special grant, $4,000 to first-time home buyers that qualify within the income limits that are relatively flexible. That one is that's the most legit one that exists.
Oh, for sure.
And if you can qualify for sure, 100% of the time you should take that. There's no reason not to. All the other ones, well, besides the American Dream Grant as well, but all the other ones, I always take a pause and a step back, and I'm not all for them all the time. In fact, I'm commonly against them to begin, and then I have to talk myself into it being the right choice for a specific client.
I play it the same way. And I think none of this matters if you don't have a good strategy. You need to come into any transaction with a good strategy. If not, you're probably going to fail.
100%. Yep. Which, I mean, I think really what you need to do is you need to have a lender that understands this stuff. There are many, many, many lenders that don't understand it. They may be talking about it, but they don't understand it. So you got to get with a lender that is experienced enough to understand it and strategic enough to be able to decipher based on your situation, is it the right choice for you and or your family to dive into one of these programs? You've got to analyze that, and you need a pro on your side to do it because there are so many little caveats and details. I mean, we're talking dozens, if not hundreds of pages of guidelines that you've got to review depending on the program to understand it. It's complicated stuff, but that's why we're here. So we'd love the opportunity to chat with you about these options in more depth if it's something you're interested in, or somebody you know is interested. Please share this episode with them, and we would love to help you out. You can reach us here at the Lassig team anytime, and we'll post our information at the end of the video. But anything else you got?
No, I think you hit it on the head. We'll catch you guys in the next one.
Awesome.
Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.